Okay, guys, so this is going to be a recap of today's market 10/3/2024. So let's go ahead and start off with the daily time frame. Okay, so today is Thursday. Wow, the week is almost done. Really? Huh, look at that. Goes by really fast. Hey, man, just so you guys know, I want to let you guys know my friend, my roommate, he got a payout today from my friend of futures and he's expecting another payout tomorrow as well. So, I mean, if he could do it, trust me, it's a lot possible for you too as well. Just so you know, daily reminder. And I'm on the journey to get my payout with my fund and futures. I just need more trading days. But that's beside the situation. But let's go in. So since today is Thursday, so today this is Friday's price action that's already started. So today this is Thursday. So sorry. So we're gonna use Wednesday's movement because as you guys can see, Thursday just closed today, and today's Friday's price action is open. Sorry, I'm using the wrong chart. So this is Wednesday's price action right there. So this would be Wednesday's low, Wednesday's high. As you guys can see, Wednesday's low wasn't taken out, Wednesday's high wasn't taken out. The reason why I say that is because sometimes we kind of like the market to kind of show us what it wants to do, because then we have a strong bias. Um, so Wednesday's low, Wednesday's high. So if we go down to the 4 hour, sorry, I have my session and stuff on there. So if you go down to the 4 hour, so we have this right here, and we have this right there. So we just put Wednesday's high, low. Okay, so Wednesday's high, Wednesday's low right there. So if you go, as you can see, so the price action wasn't the best. So clearly, we can all see we are in a ranging market. We can all clearly see this is a whole, ranging market right here. Everything right here. We haven't broken out of this range. Fine, we've spiked out of it, but we haven't seen a strong. The market hasn't decided to make a, what's it called? Tell us what direction it really wants to go. So we have to be careful in a ranging market. So small risk. You want to go for base hits, 1 to 2s, 1 to 3s. Stuff like that. So if you go to 30 minutes, we're not seeing really much price action in there. 15. Then we started to see a little bit of price action. Okay, so buy side was taken out over here with this candle, came back, grabbed the sell side liquidity and pushed up. I know as of right now I'm using too much terms, but don't worry, I'm going to break it down to you. I'm going to show you how to, look at the market without having to use all the complicated ICT menus. Some of the things you will learn as time goes on, but something that you have to learn today. Um, yeah, as you can see, so we have a breaker structure. You should know what a breaker structure is. So breaker structure, market comes back to retest this order block and pushes back up. Unfortunately, we do not take out the buy side, so then the market reverses and pushes back down and continues to range for the rest of the day. But inside this whole move, there was some really great trades. So hopefully you've taken made some money today. But so we have the 5 minute. You get to see the market becomes more clear and everything. For example, the market held this order block over here on the 15 minute. Market held this order block on here in the 15 minute. So let's say for me, I always like to go for a 1 to 2s or target like the next. So right here, the next high. So this would have been a 1 to 3. So if you'd risk $150 on this trade, you'd have made one. I don't know, so 300 plus 150, so about 450 on that trade, which is a great risk to reward. If you make that every day for 5 days, that's almost $1,500. Um, so, like I said, small risk, you make good, you build just base hits. So stuff like that. As you can see, the 5 minute worked everything. But so I personally like to go off the 2 minute, and I have the trading sessions over here. So what this was, it lets you know you get to see from 8:30, as you can see, from 8:30 all the way to 15, so 3 p.m. So this is New York session. Okay, so as you guys can see on the market, let me let me go deep into that way you guys can clearly see this properly. Okay, so first of all, we have this breaker structure that happened right here before the market, before the trading session. So yeah, but- yeah, so we have this breaker structure that happened right here, and the market came back to retest this order block right there. Okay, this order block right here, as you can see, tapped in and pushed down. So you could have probably gone a small scalp on this. You could have gone a small scalp on this. Yeah, you could have got a small scalp on this. So I mean, if you got in right here, I mean, I call them expensive scalps because I mean sometimes you could take them. Sometimes I just let the market run without having to take that trade. So this would have got you. This would have netted you if you were targeting this low. You'd have made a 1.18. So which isn't bad as well. So I mean, it's not a bad trade. I mean, look, you could have caught 1 to 2 on this trade if you just set your stuff for a 1 to 2. But like I said, this is a little bit risky because then market just immediately pushed up. So if you're stuck, if the market didn't really tap your order for the take profit, you would have just come back to break even and lost some money. So that happened over there. Then we had this breaker structure right here. Okay. Okay, so a lot of you might ask me why does my chart look like this? Why don't I use the regular chart? That is because on this trade you just see pure momentum, and some momentum is really interesting. It's really important when you trade sometimes because for people who like to trade in patterns, that's fine. People like to trade ICT. I personally feel it's too complicated for people who are just trying to make money. It doesn't have to be that too complicated, but this is the easiest way. It shows you momentum. As you can see, you can always follow the trend and follow the trend and everything like that. So that's why I use the Hibonacci chart. If you want to find it, you go down here and it's Hibonacci right there. So let's continue. Okay, so now we have this market broke this. As you can see, market pushing up. So now what you want to target next are each level is buy side. Okay, so buy side. Okay, buy side. And I'm going to show you different ways you would have traded this markets today. Okay, there are two different there are two different methods you could have traded with this today and made money. Okay. Okay. Let me turn my. Okay, there we go. Okay, so this is what we're looking at. Okay. Okay, guys, this is the 2 minute time frame. So after this breaker structure happened, right? As you guys can see, if you wanted to get on the street, you could have, because first of all, like I say, as long as we go on low risk, we can always trail our stop loss. So we don't see any order blocks to put our stop losses unders. Okay. For example, this is an order block right here. This is an order block that held, the market tapped it, pushed up. This is another order block that held, the market tapped it and pushed up. So on this whole move up here, we don't see any of that. So what we can do is, so we take out this high, right? So we can just go ahead and enter off here. Just like, for example, we're seeing momentum to the upside, right? So we can go ahead and enter somewhere right here and okay, let's say we just want to be careful. So let's say we're targeting a 1 to 1, right? We go ahead and enter right there. We expect the market to take out that highs now. So what we can do is once we get an entry from over here, we are going to trail our stop loss by every bullish candle. So we have this candle closes, stop loss is right there. Eventually, stop loss comes all the way to this candle over here. So we entered right here. Stop loss is right here. This can close stop loss right there, right there. So this you would have gotten taken out over here. But that's completely fine. You can always re-enter again. You get into another trade as well. Put your stop loss underneath there. As you can see, the market pushes up, pushes up, pushes up. Now on this one, it is a little bit tricky because then the market holds itself. So let's say you get taken out right there again for I don't know, let's say $100 loss, which is fine. Like I said, the whole point of this is to control your risk. Okay, so now you go ahead and enter again right here at the high, right? You put your stop loss underneath this. So as soon as this candle closes, your stop loss goes right there on this candle. So let me show you. And this is just one way to you could have traded this. So as you can see, you got in right there. The market closed. Your stop loss is underneath here, so it'll be stop loss right there, 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 and right there. And the market will take you out with this huge bearish candle. So like I said, this is one way you can trade in the market because as of right now we don't see any order blocks, so we can put our stop loss and look for to get in the trade. So what we would want to trade is just purely momentum. As you can see, buy side was taking buy side, and this one says break structure. Let me change that to buy side. Okay, so that's how you could trade in this momentum to your side. As you guys can see, it is pretty much easy as long as you control your risk. You won't lose too much because if you have gone in right here on this trade, if you got in right here on this trade, right, and the market takes you out over here. Never mind, you got out for a win. You made 60 ticks. That's about $150 if you're trading one mini. So that's not a bad trade. Okay, you going again on this trade. You going on this trade again, right? Right here. You getting right here. And you get stopped out on here. You lost 28 ticks. So you're still positive like 30 ticks. So that is not bad at all. Because that was almost like $200. So and you got in again, like I said, the whole point is to control your risk, especially when you're trading momentum, because sometimes the market might be tricky to take you out, but you want to make sure your stop loss is strong, so that way you don't keep moving your stop loss down. You want to make sure you have a good stop loss. So now, same thing again happens over here, man. Momentum. I personally wouldn't trade this momentum down because I'm kind of thinking we are bullish, so I'm going to be looking for a bullish scenario for him to get into a trade. Now we have this order block right here. Okay. From this whole move to the upside, this is the only order block we have. As you can see, the market played around, tapped into this, and pushed back up. Okay. So what we want to go ahead and do is, so this is a breaker structure to the downside. Okay. US. This is a breaker structure to the downside. And what happens? Okay. So if we didn't know if this was before the forecast, let's say we didn't know this was going to happen. I personally would have taken a short on here. Oh, sorry. I wouldn't. Well, I guess I could have taken a short down here to see if this order block was going to hold and push it down, but it didn't. But so what happens is we took this becomes breaker structure to the upside. So this is in line with the bias for today. Okay, so for example, we're looking for a breaker structure to the upside after this huge movement happened. As long as this low wasn't taken out, we were still bullish. So we're looking for a breaker structure to the upside. So which is what we got over here. Now, what else? What else did we get over here? Let's go ahead and take these out. Okay, so we have order block over here. So we could have got in right here, put the stop loss underneath this wick over here, and targeted this high over here. So you're looking at 1 to 1.9. I myself would probably would have stretched this a little bit to at least 1 to 2 right there. 1 to 2, which we did tap. But I'm going to explain something else to you. So we had a 1 to 2 right here on this trade. So if you'd risk $150, you'd make $300, and the list just goes on. So that happened. Okay. Now inside this trade, right, as you guys can see, we had this minor break inside the structure. Okay, we had this minor break inside the structure. The market came back and respected this order block over here on this side. So let me go ahead and move this one down here because the moves did come from over there. So for example, we had this minor break over here on this side. Okay, and you can see this candle comes back to taps into this. So you could have gone in the next, let's say you were in 2 micros, you could go in 3 micros in here, right? And this is going to be a separate trade. Okay, you go in 2 micros over here, you put your stop loss, you put your stop loss out, you got your entry over there. Now you target as high. Now you're making risk to 2.66 on the trade. So if you had risk $150, you'd made like almost $400 in this trade instead of $300. Okay, that was one of the trade. Now plus because like I said, we're all going off the order block that we see. Sometimes they hold, sometimes they don't hold, but they hold more than they don't hold, if that makes any sense. Now, if you go to, we have another order block over here on this side that happens because we had this break. Okay, we had that break over there. So the market comes in, taps in this order block, and pushes all the way up. So if you got in on this trade again on over here, you got it. This is to be 3 trades in one right here. Stop us underneath there, and we would have target this. Now, so we have that trade over there. We also have this trade that we took over here on there. So that's almost 5R to all together. And we have this one that we took as well. Okay. So almost a 7R trade because we saw the opportunities in there and the market held. Like I said, on this trade, we're always risking 1%, 1%, 1% on every single one of these trades that we saw. Because that way, if we lose this trade, then we're only down. Okay, so if we had lost, we'd only been down 2% because this one, as soon as this one pushed up into the market, our stop loss moved from over here to right there to right there. So now this first trade was completely, we don't have any risk on the table. Now the only risk we had was these 2 trades. So this happened, we got in right here. As soon as the market pushed up, we moved our stop loss underneath here. We got another trade. So now the second trade is completely riskless. So just stuff like that, guys. I mean, there's no really much holy grail. We just happen to see the market a lot clearer. That is pretty much the only holy grail that you need. So I hope you guys like this. But I mean, that's pretty much what happened. As you can see, then we have this little move again that happened over here. The market never came back to use this order block. It just kept pushing higher and higher. So we have that one over there. Now look at this one. The market did use this order block, so it pushed up, came back, pushed down, and pushed all the way over here. So on a trade like this, because we would have been targeting that high over there. So if we had gone in right there on the order block, right, put the stop loss underneath this. Okay, we're targeting right here over here. So 1 to 2.4, 2.41. Okay, so this happened, pushed up, came down, pushed down. Now, so as soon as we took out this high over here, we would have gone ahead and move our stop loss all the way over here, because then we would be expecting this new order block to hold. We would have been expecting this order block to hold and bounce up, but the market didn't do that. So on this trade, you would have lost 6 ticks. I mean, that's easy. That's not the as long as you did proper risk on every single trade, you should be fine. So then the market eventually pushes down and stuff like that. So that's what happens. Then you have a U turn around here. The market completely pushes down, and same thing would happen over here. Okay, so you see that the momentum, we don't have any order block except from this one. The market doesn't look like it's coming back up. We can see it down candles, right? You could have got in right here. Stop loss would have been on here as first because you want to see the momentum keep pushing down. Then as soon as this, you got it right here. As soon as this candle closes, you move your stop loss over here, then over here, and like I said, you're completely risk free. So that's when there are like two different. I showed you two different ways you could have traded the market today. Momentum, then order blocks. Those are the only two setups, the holy grail, if you will, if you want to call them that you're going to need. All you need is a clear market, and you can clearly see the market and just pick a direction on where the market wants to go and proper risk. So if you have $100 risk on the table, you're more likely to let the trade run. If you have $1,000 risk on the table and you can't handle $1,000 risk, then you're more likely to cut the trade short and lose money at that as well. So it's all about, like I said, controlling risk. And I know I sound like a hypocrite because sometimes, I get an emotional hijack and I don't control my risk as well. But this is something you could do. So, if you're going right there, this candle was taken out, your stop loss to be, down, 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 down. Then this bullish kind of takes out the slow so you'd have been taken out for that trade. But that is not bad at all. I mean, look at you got in right there and you just trailed. So this would have netted you, okay, 242 ticks. You do the math. I personally on this trade, because I would be trading markets, I wouldn't trade minis on this because you never know when the market can reverse. I mean, you're looking at $2.05 per tick. You have to be 5 micros, which would make you a lot of money. So let's do the math. So if you go to the calculator, this would be $2.05 times 252. So that's almost $630 in one day. That's not bad at all. I mean, this is just one of the trades of the many trades we looked at. Well, and I think pretty much the rest happens. Break a structure over here, break a structure up over here. This video is going to be pretty long because I mean there was so much price action today, so that's why. So break a structure happened over here. I probably would have taken this trade because I thought the continuation after this huge move, I thought we would have seen more continuation to the downside. So even if you go on this trade over here, you enter right there this order block with your stop loss on the high of this candle, and you're targeting this low order 1 to 2 right there. But the market doesn't see that's not what the market had in mind, and this happened. As you can see, the market did react and start pushing down, but there wasn't enough momentum. So stop loss was being moved all the way over here and taking a small loss and called it a day. But I mean, that pretty much would have been it for that one. Then we had this huge push over here, this breaker structure that happened. Good breaker structure because you can see close with the body too. So, okay, breaker structure happened right there and order blocks. And I mean, this is toward almost the last couple hours of the day. So, I mean, if you go in right there in this order block, stop loss underneath the slow over here, risk 1%. So, let's say $150 on this trade, you were targeted this high. So this would be no 1 to 3. So if you'd risk $150 on that trade times 3. Okay, you'd made 450 on that trade. So that's not bad. Imagine making $450 for 20 days or 10 days. You're looking at for 10 days, you're looking at 4,500. So that's not bad as well. And like I said, so it's one of those situations. So this, I mean, this is pretty much all the price action we had today. I hope you guys like it. Please like and subscribe. Thank you so much for watching. Bye.